Good morning, everybody. I'm Doc McGraw, founder of Doc McGraw's Options Gelt. I see two people here, three people here. Good morning, as people are filtering in. And let me get a few things ready and we'll get started. Okay, and I still got this black eye from the sinus infection that caused something to erupt. So I'm gonna turn it off. Okay. And so as people are filtering in, let's talk about what happened overnight. And we're just going to kind of talk a little bit. And then when people get here and the room fills up a little bit, I'll go through kind of the more formal thing. So let's see, who's here? Anybody here? Well, I see 33 people here. Let's see some comments, especially on Twitter. You Twitter guys are like so quiet all the time. Give me 1 second here. Okay. All right, so here we are. Let's take a look at what's going on. Good morning. Okay, there you go. There's my friends. So I'm going to start from where we are now, and then we'll circle back around to how we're going to trade this, kind of what happened and how we got here. And so we're real close to the overnight low. And as you can see here, let's just go back to the overnight session. Good morning. Good morning. Okay, now we got some folks here. So in the overnight session, we had some weakness, nothing crazy. We're down, 0.5%, 1/3%. And then I didn't see exactly when the news hit the tape or how it did, because I was asleep at midnight. But what the news was, as far as I can tell, good morning, Gabriel. What the news was, as far as I could tell, was the Japan yen is trading at 40 years lows. I thought it was 20 years lows, it was 40 years lows. Now, if you remember, I had mentioned yesterday that the Secretary of Treasury and the Japan finance minister, or I'm not sure the exact title, had a phone call yesterday to, I guess, talking about stabilizing the yen. And that's sort of what kind of caused yesterday's weakness to begin with. Well, I suppose whatever they tried to do didn't work or didn't calm the market. So I'm not sure what all the macro bro mechanics of that are. And so it causes cascades. The dollar, I don't have it up over here. We'll look at the dollar before, but the dollar is going up. Treasuries kind of popped. Volatility popped. We'll get to all of those in more detail in a minute. And down we went as algos did their thing. We could throw into it the hyperscaler, hyperspend rotation that's been going on already, going from the spenders, the hyperscalers, to those that benefit from the hyperscaling, the memory makers. And that rotation has been going on. And we have Micron earnings coming up. And so that's a whole nother layer of this. And there's a whole nother layer in the volatility correlation section, which we're going to get to shortly rather. Let me show you one thing, and then we're going to get to the sort of official presentation. And what I got to show you is this. My thoughts on MU earnings, we'll get to that. We'll get to that. But I'll tell you what the brief version of my thoughts are. If I had Micron's earnings report on my desk with the best AI LLM there to help me understand the balance sheet and all that, I still couldn't tell you what the market would do. Okay, so we're going to kind of jump into the deep water for a second and then head back around. I knew you'd say that. You know me. I think it's true. Okay, so this is positive gamma down there. They haven't closed them out yet, so they're hanging tough. That's my people. I'm a premium seller, so I like to see, premium sellers solidarity. ES 7,400 and lower. So you're predicting we break 7,400? And that's a 60-point-ish difference. So that's 60 points lower from here. 60 points lower from here. Let's see. 60 point makes it 7,300. Well, that's pretty solid support here. Let's see. And I'll give you my 2 cents. I expect to see buyers there. I expect to see market maker hedging response before we get there. And a lot of it has to do with what happens with IV or volatility. The buyers I'm talking about are the mechanical buyers or market makers. I'm not talking about the price acceptance, that kind of thing. I'm not talking about like real buyers. I'm talking about mechanical buyers, price insensitive buyers. Yeah, VIX is high. And so if VIX comes in a little bit, because VIX tends to be higher in the pre-market because liquidity is thin. Let's remember, VIX is a calculation, VIX is math. VIX is the strip of options 30 days forward, actually not exactly, but we'll put that aside, calculated based on the bid-ask spread of the different tenors and strips of options. Liquidity is thin now, so VIX tends to get overestimated in the pre-market. So, yeah, VIX is high. I think it's artificially high, at least for now. I'm not saying it can't go higher in the later on. I say we look at VX at the futures. I like to look at the futures. Okay, so we bounced right here at 73.50. Good morning, Perry. So we bounced right here at 73.50, which is kind of a gift. There's 1,000 contracts here. The stronger level is over here at 73.25, and we have 8,000 contracts down here. So this whole thing creates a positive gamma potential bounce zone. And on top, it's thin. On top, I don't really have a reference point from a gamma point of view, what I might call my edge. I don't like to call it that. Need to see the options on VIX calls. I'll show you that. We'll get to that a little later. That's a good add-on to the analysis. And so this creates a buying zone where we don't really have many good reference points above. And now that we have, okay, 139 people here, it's almost 8:45. Time to get started more officially, and then we'll circle back around to all the interesting discussions that I like to engage in. And for that, let's go back to the chart for a second. And that 73.50 is holding. I think it's probably going to hold. Gun to my head, the 50-day moving average area, 73.25, probably holds. And I wouldn't be surprised to hear the Treasury Secretary start talking about how they're going to stabilize the yen. I have no insider knowledge, obviously, but you know how this movie plays. Okay, so I'm Doc McGraw, founder of Doc McGraw's Options Gelt, and we're going to talk about how the SPX is going to trade today. And my daily plan includes a detailed roadmap. It includes my proprietary trading view string, which I developed myself. I don't have an algo do it. I do what I do, secret sauce, whatever. And it includes my Discord trading room where we live stream and we talk about all kinds of crazy stuff. Here we have all kinds of crazy stuff. We have Doc's commentary here. So you're just getting a small snippet of my musings and ramblings and charts and stuff. Anyway, I digress. So click subscribe, you get the free one, get the paid one, get whatever you like. Anyway, here we are. So overnight flush finds support. Now what? Exactly. Japan rattled the tape, tech rolled over. Yesterday we saw the MAG 7, the MAGS ETF is what I like to look at. It's kind of below its 200-day moving average, and I think that matters, but it's also a good place to maybe find support and take a long. Okay, so opening one of the most important support areas on the board. Hi, everybody. Thank you so much. Thank you, G. I appreciate it. I kind of enjoy it. I kind of take it seriously in a fun sort of way. Always find layers of rabbit holes, more layers of the onion, no matter how much I peel. Okay, so the macro global concerns, as I said before, the yen is at 40-year low. And no, I don't keep a yen chart, a monthly yen chart on my dashboard, but the news, so everybody checks. Okay. Intervention chatter, I think something's going to happen. The Japanese warned of resolute measures, and we mentioned this yesterday. I've been mentioning this tangentially for weeks. There was sniffs of this, people have been talking about it for a while. I consulted my local macro bros. One of my buddies who used to be a moderator with me back in the Mentor Q days, I asked him to come on today, but right now he's working on a trading desk. He's gone to the professional side, so he isn't allowed to come on, but I'll get some info from him through the back channel. Not through the back channel, he can talk to me, He maybe can't go on live stream, but he can tell me what he thinks. Okay. Markets tend to pay attention when Tokyo starts talking. At the same time, we know Alphabet, Amazon, Broadcom have been selling. Broadcom's been in the shitter since the earnings. Gamma is softer gamma environment. Why is that? Well, we just had the big June Q2 expiration. So let's remember this. Clip that. Market makers' gamma exposure is a function of open interest, or how many contracts they hold, not open interest you see on your chart, on your not chart, excuse me, on your options chain, if they're long or short that, and how far away they are in time. The June expiration was large. It was a quarterly expiration. And for the last 2 weeks, it was 2 weeks away. So we had a large expiration, open interest wise, and close in. Now we have the July, which is smaller and it's further out in time. So there's just less gamma, just less there. As we can see here, gamma is thin. There's really not much there. It's pretty thick down here, 73, 30, 20, and it's thick up on top, like up above 7,600. Up here it's thick, 7,650. Okay, so 7,300 or 7,275 looks solid, and 7,650, 7,700 looks solid. Great. We have a lot of real estate in between there. There's a lot of real estate between 7,600 and 7,320. A lot of real estate there. And it is what it is. So that's what this was referring to, softer gamma. Okay, let's talk about volatility. Let's talk about volatility. One more volatility wrinkle worth noting. The VIX, as somebody pointed out, as G pointed out, the VIX is high. The VIX moved up more aggressively, I think it was, I don't know, 15, 20%, versus the VIX futures, which are up about 4 or 5%. It's going to be a moving target. I just want to get the general idea across to you now. Just like any forward-looking instrument, an option a month out, whatever you want to call it, you pay a time premium. There should be, quote unquote, a time premium for the futures. The futures tend to trade above the VIX cash, we'll call it. When they don't, and we saw that during the March-April sell-off, it means the bid for protection, the bid for vol, is kind of extreme and exaggerated. Typically, the VIX futures win at the end of the day. Now, this is not a crazy difference. It's a couple points, but it still matters. And so I call bullshit on the VIX today. Not saying the VIX is gonna drop. I think that the VIX has probably reached its peak, or it's going to. What I think is more important is the VIX 9-day. Why is the VIX 9-day more important? The VIX 9-day is more important for me as a short-term trader, because that tells me what customers are paying, or the demand for shorter-term options, let's be honest, for downside skew, for protection. And so what they're paying, if the volatility goes up short term, wherever market makers are short those puts, those deltas increase, making them shorter. The buffering power of the market maker long options gets eroded because the distribution widens, and we're not going to go into a whole lesson on that. And so that whole dynamic gets a little messier. So I want to watch the VIX 9-day for that reason alone. Additionally, I want to watch the VIX 9-day. And since the all-time high in the sell-off a couple of weeks ago, I've been talking about, and other people have been talking about, the whole correlation trade. And we had we had call skew, especially in the mega caps off the chain. So let's look at this. I'll come back around to that. I don't want to do this one. I want to do this one, the straight arithmetic one. So let's just do this for a second, just to turn back the clock in history so you get some context. So during the March sell-off, the VIX 9-day, you see a minus, so the VIX 9-day is greater than the VIX. And that's unhealthy, unnatural. Again, predicting 30 days is harder than predicting 9 days. Right at that sell-off, at the low 72.50-ish, we were at this level that was really last seen last year. The difference was last seen last year during like the Liberation Day nonsense. Okay, so we were at -3. That was kind of the bottom. We were inverted. Then we kind of slowly uninverted, and we were like Thursday, we were at around 1. Uninverted, still a difference of 2 is what you would expect. 1 is okay, but a little iffy. Here you can see the moving average. Here's what the difference should be, quote unquote, 1.5 recently. So over the weekend, Thursday to Monday, Thursday, the VIX 9-day closed at like 13 and change. Why? Because nobody wanted a high volatility over a weekend with theta. And so we had a 3-point difference, 3.9-point difference, crazy difference. Well, it was 3 the other day. And that's not normal. I said it right here on live stream. We went from -3 to +3. Crazy pendulum swing. Then we closed yesterday, it was 1. So this VIX 9-day is a reflection of the general instability in the volatility space. We also have, parenthetically, I'll get to it, the difference, the VXN, the volatility of the NASDAQ divided by VIX is also at historic levels. So everything is at historic levels. Everything is kind of acting crazy. Technical term. You see the correlation, it had gotten down to record lows before that sell-off. And then, okay, it kind of normalized to 16. We expect it to be 2 to 3x the bottom when it corrects. And then it came right back down to 8, the correlation, the rotation. And so the taper, the volatility, the positioning is still unhealthy. It's still unhealthy. That's the short version of that story. So all this is going on under the hood. And let's talk about briefly here, in case I don't get to it, it's actually not the next 9 days. It's actually going 9 days into the close. It's going 9 days into the future. It's an estimate of 9 days. go 9 days into the future, take the Friday before 9 days into the future, the Friday after 9 days into the future, and it's apply the secret sauce to that. Just like the VIX isn't really 30 days, it's go 30 days into the future and take the Friday before 30 days into the future and the Friday after 30 days into the future. So it's the same calculation method. It's the same CBOE secret sauce, only applied 9 days versus 30 days. Be curious whether volatility rolls up to options expiring on the 30th or up to July. It would be whatever the Friday is. So it's really going to be this Friday and the Friday after. And remember, we have PCE on Thursday. See, you're getting me off my presentation, which is not hard. We have PCE on Thursday, so that volatility is going to be expected in this Friday. People are nervous about rates now with Japan and with Warsh and all that, and I expect the vol for Thursday to stay bid. So we'll see. Expiration dates. I'm not sure what you're referring to. Anyway, let me get back on track, because I can go down rabbit holes, which is why, let me show you this. Let's fool around for a second. On my VIX dashboard that my premium subscribers get, I have a rabbit hole section. VXN VIX at 20-year extreme, tech vol versus the broader market, as well as the decomposition index, which I always look at, the mess, summary, term structure, whatever. Really, I started doing this for myself to keep track of everything, just in the volatility space. And like anything else, all these projects, it just kind of grew and took on a life of its own. So anyway, getting back to the more formal presentation. So the VIX 9-day structure. When we go from inverted to uninverted, we get a nice pop. We have consumer confidence, okay. We have Fed speakers, okay. We have Micron's earnings, and I'll take out the crystal ball. I'll tell you what they're going to be. Here's what I can tell you. The market expects strong demand for the high bandwidth stuff. The question is whether management can exceed the expectations or not. Guidance, pricing trends, supply strain constraints, all that stuff. The long memory trade has become crowded. SOXL, the 3X leverage ETF, they started unwinding it yesterday. I got the numbers somewhere, put them in my server somewhere. I think I have them here. No, I don't have them here. I put them somewhere else. I think it's about 1 billion to sell just for the semis. Added on to SPXL, TQQ, et cetera, on about a 1% down move. Leverage ETFs have to rebalance, remember? So at the end of the day, the leverage ETFs will have to rebalance. If we're down about 1%, it'll probably be 10 points at the end of the day. Just like that day we had the low, I think it was a Friday low. At the end of the day, we tanked, leverage ETF rebalancing. That typically happens around 3:30. I'm not sure if there's front running. People tell me they're officially not supposed to be, but I hear tell through back channels that there is some. Okay, so yesterday's range, 70 or 75.8. Whoops, that's not supposed to be a decimal point. I was dictating it. 75.8, I said 75.80, and my whisper flow made it 75.8 to 72.40. Expect to move today. When I looked, which was around 7 a.m., was 73.10 to 74.20. The weekly straddle when I looked was 72.45 to 74.90. Let's get some perspective on that. And remember, we're looking for confluence between all these different zones and levels. So the 50-day is here. The expected move bottom is 73.10. Gamma, positive gamma starts to kick in pretty strong down here. And so I like that area. I like that area. Does vol explode from here, or is it kind of priced in? That's the question. We'll find out. I'm not trying to predict, although I have an idea. I'm trying to react. Okay, so I think we pretty much, here's my little annotated version of the different paths that we could go on, depending where we are. So we're right around here. Earlier in the day, there's nowhere to go. There's, not much hedging pulling us one way or another. We get to later in the day, we bounce off of this 73, 40, 50, 20 area, and we can kind of take this path to 73.90, 7400, all the way to the top of the expected move, 74.20. Isn't it convenient that we have a feature there? Or we can kind of follow the path down somewhere into here. Should we somehow get some liftoff over 7,400, then, we can come into this 73.50 area and kind of come right down to there. I'm not expecting that to happen, but that's an if-then. It's conditional. Path dependent. And then I told you about the short-dated volatility. VIX 9-day was roughly 3 points below VIX to 3 points above it. Now it was 1 point above. And so that's just not normal. Okay, so I think we pretty much have it. I think we pretty much have the outline, the roadmap. I'll say I did a pretty good job here. So now let's go back to this. Pretty good job of covering everything in a relatively short period of time, concise. If you have questions, please open them up. Let's take a look at the VIX dashboard. Let's take a look. We're going to take a look at a few other things. I use a lot of different sources. I do this for a living for myself. I also try to help you guys out. And so I integrate as much as I can. I analyze, break down, and then reintegrate. Analysis, synthesis. That's the analytics part of Quantuition. And then intuition isn't magic. Intuition is fast processing based on learned cognitive patterns and neural pathways and schema templates that are in the brain that just are pulled out automatically. You don't have to think about pulling them out. That's the level of conscious competence. That comes from reps. It comes from reps of making trades. It comes from reps of looking at charts. It also comes from reps of the time you put in. Then it just becomes automatic. Okay, so all that said, let's look at VIX, shall we? I think G wanted to look at VIX. Okay, while it's turning, you can discuss amongst yourselves. Let's go to these guys in the meantime. Let's take a look at, I don't want to do this. I don't want to screw it up too much. VIX. Now this is gamma, not position number. And obviously we don't want to see the nearest one. We want to see, let's go all. And 20 is the number. 20 is the number. It's really that simple. And we'll get it more granular. So under 20, then market, so 20 is where the hedging demand is gonna kick in. And that's why we went up to 20 and we got this. And by now, let's look at it a little more granular. Come on, baby, you can do it. We can help. This is Home Depot. Hey, Selena, do you have a late pass? We'll take a look. Typically, there is some. Also, remember, you gotta remember in VIX, we get a lot of butterflies. We get a lot of ratios. On the call side, my VIX positions are all ratios. She caught my little joke. Okay, come on, guys. Let's go. Let's go. It's not them. I mean, it's my computer. There we go. All right. And it always defaults to this view, even though I don't want it to. But I have to ask them what WTF with that. Let's just go 40. Now let's just leave it there. It doesn't really matter. Let's go all. And you see, so here's where market makers are short. So we climb this stack up. We climb this stack up. And we have stalling over here. It's going to be hard to get through here. And the next really big level is 30. With a little notch here at 24, 25. And if you remember last week, whenever it was, when we had that sell-off, we got to about 23 intraday, a little bit, 22. And so here's what matters. Remember, these are two-way ladders. Ladder up. Whoa, what happened? What happened? Okay, here we go again. What the? Is that right? I don't even know if that's right or not. I don't know what we're looking at. Okay, maybe that was all adjusting. Okay, all right, now we can see it a little more cleanly. Okay, so here's the two-way ladder up to 20. This looks more normal. Between 20 and 22, 23, 22 and a half. Actually, that was my fly. At a 22 and a half mid is my fly. 15, 22 and a half. I made it wider on top, like 15, 22 and a half, 35 or 40 on top. That way I get the premium, and my break even is something like VIX 16 or 17. I think I calculated so my break even should be VIX 16. Might have even got a tiny credit for it. So as long as we're, never mind. So yeah, okay. So to answer your question, here's 20. There is a pull up to 22 with a stall at 23, but this is a two-way ladder. And 24, 25. So this can be toxic. This can be toxic. This is position number. If we want to look at a gamma to see how much pull is in them, it changes the picture a little bit, not a lot. Here's 20. That's a real decision point. 22, you could get pulled up, but then if it stalls, you get pulled back down. We shouldn't go above 23. And here's 25, next level up. Did that answer your question? Yeah, so nothing at 25, as you saw. Something at 24. Ladder pretty much up to 22, 23. And now we're back on PX. Good. Now we're back on SPX. This is gamma now, not position number. Why do I like to look at position number? Because position number tells me where the landmines are. If I'm not close to a landmine, and if it's gamma, it's going to be small. But I want to know where we are because I want to map out the path. So if we break 73.50, got to pretty much avoid right till down here, 73.30. And then we have the 50-day moving average area and a pretty sizable chunky level with, remember, as you head down, market makers have to hedge this too. So you have this hedging flow coming from below. Hedging flow means buying. They're neutralizing their delta. So that's it. I'm not expecting a big catastrophe today. I'm not saying that we're like hitting all-time highs today. Would it shock me if we close at 73.50, 25? Wouldn't shock me. But I'd be more shocked if we closed at 73.25 than if we closed at 7,400 or 70. I'd be more shocked if we closed here than if we closed up here or up here. It wouldn't shock me if we ended up with a 20-point down day, something like that. 74.25, 74.50, somewhere in here. Wouldn't shock me. Not a prediction. I mean, anything in here makes sense too. But shock value, anything down at 7,000? Yeah, there's plenty down there. Let's see. 72.85 is the big one. Well, I'm only going down to 7,200. If we break 72.50, then it can get nasty again. Here's your think support. Green is good. 73.25. Between 50 and 30, really not much to talk about. Now we have help from the cavalry here at 73.20. We have a 10 wide put credit spread right here for Thursday, FOMC day. But now we have some bad guys over here, 73.25 Friday. So this area is a contested area. We don't really have much help from long calls up here anywhere. So the best help we have is at 7,400. As we go up, market makers are going to have to buy to hedge that up, but that's out in time. There's going to be zero DTE buying of calls. No, not there's going to be. If there's zero DTE buying of calls, then we're going to see it go up. And yet, was it yesterday, Kevin, that we saw the weaponized algos, the algos toward the pin? They surgically bought calls, got the like a charm flip. You know, the calls went in the money, we went up. Then they dumped the calls and bought puts. It was beautiful. It was beautiful. For those of you that like this kind of crap. Where was it? I gotta go back and show you. It was great. Here it was yesterday, 7:53 p.m. Was this it? Yeah. They started buying whatever the 7470 calls, 45 cents. See that? See that big volume? Well, we saw it in the option depth in customers long, not the total volume. So then I jumped into the chart of the chain to see what was going on. And then they went up to $7, 45 cents to $7. And I don't know if I charted the puts. Is this the puts? Yeah, and the puts were 30 cents, the 70 puts, and they flipped into these. See that? They flipped into these. It was beautiful. And the charm acted accordingly. Yeah, it was great. It was fun. And so, yeah, I'm saying that not to toot my horn, although if you subscribe, you get this kind of crap. Do we always find something that beautiful? No, of course not. But when we do, it's fun. I'm saying that to say this: intraday buyers, algos are going to do shit like that, whether it's at the end of the day and at different points. Weaponized gamma, I call it. And so that's another thing we have to keep our eye on. I'm grateful that options depth now has minute CBOE updates, minute data. By minute, we find out the positioning. Now, yes, if it happened a minute ago, the hedging already happened, but there's still plenty of football to be played. And I guess for fun, last thing that I'm really going to see that you guys made me stay. Okay. So the 7300s tacoed. They ran away. Chickens. See, this was all the way out here. So when I wrote the note, this was all the way out here. So 7300 left the building. 74, 75, whoever was here left the building, doesn't really matter. Those are really the only two things. So this got a little weaker down here. The 25 is still here and the 50 is still here, but the reinforcements underneath 25 got a little weaker. But we still have the flow from here. So when you aggregate it, still pretty solid here toward the end of the day. At 9, 10 o'clock, light blue, not a lot of help from here. So you don't want to slip below. And we're going to wait for see if the 0 DT iron conduit sellers come in, which they typically do. And gun to my head, if I had a guess, because I always get guns to my head, I mean, to guess these things. I'm just pulling up a chain real quick. Hold on. Okay, let's take a quick look. Oh shit, okay, never mind. Okay, take two. Let's take a quick look. I'm going to play crystal ball and see where I think the IC sellers are going to come in. Oh, shit. The numbers have gone by about us. The IC sellers are going to come in probably somewhere. I wouldn't be surprised if they're down here at 72.50. Let's see what that looks like. That's not bad. They're going to come in somewhere around here. I'm going to throw one in for fun. And if they come in on top, they're going to come in probably around 55, say 50-50-ish. Expect the move is 42. They're going to come in around 50-50-ish. So maybe come in somewhere around here on top. And wherever they come in, that sets the edge for the day. And that's it. Thank you all for listening. I got 300 people here. All right, the audience comes at the end of the show. You came for the finale. And so, in summary, we have a macro-driven sell-off, plus rotation, Mag 7, all that kind of stuff, hyperscalers, into a thin gamma environment. So there's some down here at 50, where we bottomed out in the overnight session. See? So there is some force buying there. There's more buying down here at the 20-day, at the 50-day moving average. With PCE coming up on Thursday, so markets are going to stay jittery with the VIX 9-day and the VIX inverting and uninverting with the dislocation, or whatever you want to call it, from a couple of weeks ago when we hit all-time highs, when we had that crazy run for a month or whatever it was. Still trying to find balance, pendulum swinging to each side, not as extreme, but left, right, trying to find the balance of equilibrium with leverage ETFs who are going to have to be selling. I did the math, I have it somewhere. But let's just say if we're down 1%, it'll probably be at least another 10 points selling into the close, say 315, 330. Unless positioning states otherwise. That's updated my SPX plan. That looks good. Yeah, I agree. A little close, a little dicey, but yeah. Oh, you updated. Okay, so Selena is a subscriber. I've asked/challenged my people to write a daily plan themselves. A few people do it. Selena's been one that's been doing it, refining it, developing the intuition and the reps that make this become automatic. Oh, FYI, you heard it first. Well, not first, but I'm in the process of writing a book about gamma and hedging and SPX. It's not going to be as quanty. It's going to be practical. I'm not expecting it to be a bestseller. I just was surprised when I checked Amazon, all this shit that we do, all the zero DTE, iron condor sellers, all that, there's no book. There's lots of articles, there's lots of blogs, there's lots of all that stuff. So I got a book in me, and you'll see it. Yes, she is. She is. And we have a nice supportive community. All right, it's looking nasty over here. It's looking nasty over here. Come on. All right, that's it. Trade safe, be careful, and it's okay if you don't trade today. It's okay. No trade is a position. Thank you. Like, retweet, subscribe, etc., etc.